They tell you inflation hurts everyone equally. That's a lie. Inflation is the greatest wealth transfer mechanism in history. From poor to rich, from workers to asset owners, from savers to debtors. And it's not accidental. It's designed this way. When the Federal Reserve prints $4 trillion, that money doesn't reach you first. It goes to banks, to corporations, to asset owners. By the time it reaches workers, prices have already risen. The rich get cheap money to buy assets. You get expensive groceries. This is the story of how inflation systematically enriches the wealthy, while destroying the middle class. How money printing creates billionaires. And why the people who control the money supply want inflation to continue. Stay with me. Because what you're about to learn will make you see every price increase, every stimulus, every Fed policy completely differently. Inflation isn't a bug in the system. It's a feature, and you're paying for it. Let's start with how inflation actually works. Because what they teach you is wrong. The lie. When there's too much money chasing too few goods, prices rise. This hurts everyone equally. The truth. Inflation doesn't affect everyone equally. It flows through the economy in stages. And each stage redistributes wealth upward. Stage 1. Money creation. Federal Reserve creates new money. Either by buying government bonds, quantitative easing, lowering interest rates, making loans cheaper, direct lending to banks. This new money enters the financial system. But who gets it first? Stage 2. The Cantillon effect. Richard Cantillon, 18th century economist, discovered this. Whoever gets new money first benefits most. By the time money reaches the general population, prices have already risen. Here's the order. First recipients. Federal Reserve member banks, primary dealers 20 large banks. Federal government through bond purchases, large corporations through cheap loans. These entities get money at old prices. Before inflation hits. Second recipients. Asset markets, stocks, bonds, real estate, wealthy individuals who own these assets, private equity and hedge funds money flows into assets. Prices rise. Asset owners get richer. Last recipients, workers through wages, small businesses, savers people on fixed incomes. By the time money reaches you, prices have already increased. Your purchasing power drops. The result, first recipients buy assets at old prices, sell at new prices, get rich. Last recipients earn wages at old rates, pay new prices, get poorer. This is inflation as wealth transfer. Systematic, predictable, devastating. Example, 2022-2021, Fed prints $4 trillion. Stock market rises 40%. Real estate rises 30%. Billionaire wealth increases $2 trillion. Worker wages up to 2-3%. Meanwhile, food up 15%. Rent up 20%. Energy up 40%. Workers got 2% raises, while costs rose 15% plus. That's 13% real wage decrease. Billionaires got $2 trillion richer. Workers got 13% poorer. Same inflation, opposite effects. This isn't coincidence, it's design. Now let's look at assets versus cash. Because this is where inflation really destroys the middle class. The rich own assets. Stocks, real estate, businesses, commodities, art, and collectibles. The middle class and poor hold cash, savings accounts, checking accounts, cash under mattress money market funds. During inflation, what happens? Assets appreciate. Stocks. Companies raise prices. Profits increase in nominal terms. Stock prices rise. Real estate, fixed supply, increasing money supply. Prices must rise. Plus, people flee cash into real estate. Businesses own real assets, equipment, inventory, property. These appreciate with inflation. Commodities, gold, oil, materials. These are real things. Can't be inflated away. Cash depreciates. Your savings lose purchasing power. Every day automatically. Guaranteed. 2% inflation equals 2% theft from savers annually. 5% inflation equals 5% theft. 10% inflation equals half your savings gone in 7 years. The Wealth Gap, 2008. Fed starts QES&P 500 at 800. Housing crashed. Rich people with money buy stocks at 800. Buy foreclosed homes cheap. Middle class lost jobs, lost homes. No money to invest. 2024. S&P 500 at 5,000 plus. Homes up 100 to 200%. Rich made 500% plus returns. Middle class still recovering. Why the middle class can't participate? Don't have spare money during crisis, lost jobs, depleted savings. Don't have financial literacy to buy assets during crashes. don't have connections to get cheap money from banks, can't afford to hold assets long-term, need cash for expenses. By the time middle class has money to invest, assets are expensive. They buy high, then crashes happen. They panic sell, lose money. The systematic nature. This isn't random. Every major monetary expansion follows same pattern. Crisis hits 2008. 2020 Fed prints money, rich buy assets. At bottom, assets rise from new money. Middle class buys at top, eventually crashes. Middle class loses. Rich buy again at bottom, repeat. It's a wealth extraction machine, disguised as crisis management. Now let's talk about debt. Because here's where inflation gets really interesting. The rich are debtors. The middle class are creditors. Wait, that sounds backwards, right? Rich people borrow more money. How are middle class creditors? Here's how. The rich borrow to buy assets, take out mortgages to buy rental properties, borrow against stock portfolios to invest more, use corporate debt to buy back stock, use leverage to amplify returns. This means they owe WE money. They're debtors. The middle class lend through savings. Your savings account. You're lending to the bank. Your bonds. You're lending to government, corporations, your pension fund. Holding bonds, lending money. You're a creditor, you're owed money. During inflation, debtors win. They borrowed valuable money. They repay in less valuable money. Example, you borrow $1 million at 3% to buy rental properties. Inflation hits 7%. Your debt shrinks in real terms. Your properties appreciate. You're winning massively. Creditors low say they lent valuable money. They get repaid in less valuable money. Example, you have $100,000 in savings, earning 1% interest. Inflation is 7%. You're losing 6% real value annually. Your purchasing power shrinking. The systematic advantage. Rich people can borrow at lower rates, better credit, connections, collateral. Can borrow longer terms, 30-year mortgages, corporate bonds. Can use debt to buy assets, real estate, businesses, stocks. Middle class can't do this. Don't have collateral, don't have connections, don't know how. So rich use debt as a wealth building tool. Middle class avoid debt except student loans and car loans, which don't buy appreciating assets. The ultimate trick, during high inflation, rich people's debt gets inflated away, effectively forgiven. Your $1 million mortgage becomes worth $600,000 in real terms after 10 years of 7% inflation. But your income from rental property increased with inflation. So you're paying debt with inflated dollars, while collecting inflated rent. You're getting rich from inflation, while savers who lent you money get poorer. Why the Fed enables this? Fed's mandate, price stability, and maximum employment. But what they really do, inflate asset prices. Help debtors rich, hurt creditors, middle-class savers. They claim it's for economic growth. Really, it's wealth transfer. Let's look at specific examples. Real people, real numbers. Example 1. Elon Musk, 2020. Musk's wealth is $25 billion. Mostly Tesla stock. Fed prints for $1 trillion. Stock market booms. Tesla stock rises 700%. 2021. Musk's wealth is $300 billion. He gained $275 billion in 1 year. Not from building more cars. From inflation. That money came from somewhere. From every person holding cash savings. From every worker whose wage didn't keep up. Example 2. Real estate investors, 2010. Buy foreclosed home for $150,000. Put $30,000 down. Borrow $120,000 at 4%. 2024. Home worth $450,000. Still owe about $100,000. Equity, $350,000. Return on $30,000 investment, 1,067%. Meanwhile, person who saved $30,000 in bank at 1% interest now has $34,000. Real estate investor made $320,000. Saver made $4,000. Same starting amount, vastly different outcomes. Inflation made the difference. Example 3. Corporate America 2022-2023. Companies blame inflation for raising prices. Supply chain issues. Labor shortages. We have to raise prices. But look at profit margins. They increased, not decreased. Corporate profits hit record highs. While they claim costs forced price increases, they used inflation as cover to raise prices beyond cost increases. Pocketed the difference. Workers got 3% raises. Costs rose 7%. Corporations pocketed 10% plus profit increases. Inflation enabled price gouging. Workers paid for it. Example 4. The typical American 2020 has $50,000 in savings, no assets, rents apartment. 2024 still has $50,000 in savings, maybe $53,000 with interest, but purchasing power down 25%. That $50,000 buys what? $37,500 bought in 2020, lost $12,500 in real terms, just from holding cash. Meanwhile, anyone who bought stocks, real estate, or crypto in 2020 doubled or tripled their money. The saver, who did everything right, got destroyed. The risk takers got rich. This is inflation at work, punishing savers, rewarding leverage. So why does the Fed keep creating inflation? If it hurts so many people, why continue? Reason 1. Helps the government. US owes $38 trillion. That debt gets inflated away. Government borrows expensive dollars, repays in cheap dollars. 7% inflation for 10 years equals debt, reduced 50%. In real terms, the government wants inflation. It's how they default without officially defaulting. Reason 2. Helps the banking system. Banks borrow at low rates from Fed, lend at higher rates to you. Profit from spread. During inflation with loose money, banks make enormous profits. 2021, record bank profits. Fed serves the banks, creates conditions for maximum bank profit. Reason 3. Prevents deflation. Fed fears deflation more than inflation. Why? Deflation helps savers, hurts debtors, makes debt more expensive in real terms. Since government and rich are debtors, deflation would hurt them. Can't allow that. So Fed creates perpetual inflation, claims its price stability 2% target. Reason 4. Asset price support. Stock market crash. Fed prints money. Real estate crash. Fed prints money. They call it supporting the economy, really supporting asset prices. Who owns assets? The rich. Fed is protecting rich people's wealth. Reason 5. Those in power benefit. Politicians, Fed officials, economists advising policy, all own assets, all benefit from inflation. They won't admit it, but their personal wealth increases from the policies they promote. Conflict of interest is baked into the system. The truth: inflation is a feature, not a bug. It's designed to transfer wealth upward, from workers to asset owners, from savers to debtors, from poor to rich. And the people with power to stop it are the people who benefit from it. So it continues, must continue, will continue, until the whole system breaks. So here's the truth about inflation. It's the greatest wealth redistribution scheme in history. They tell you it hurts everyone equally. That's propaganda. Inflation systematically enriches asset owners while destroying savers and workers. The Cantillon effect ensures new money goes to rich first. Asset owners benefit before prices rise. Workers get wages after prices increase. The rich own appreciating assets. Middle class holds depreciating cash. During inflation, wealth gap explodes. The rich are strategic debtors, borrow cheap money, buy assets. Debt inflates away. Middle class are unintentional creditors, lend through savings, get repaid in worthless dollars. Real examples prove it. Musk gained $275 billion in 1 year. Real estate investors made 1,000% plus returns. Corporations hit record profits, while savers lost 25% purchasing power. And the Fed keeps creating inflation because it benefits. Government inflates away debt. Banks profit from loose money. Asset owners' wealth increases. Politicians own assets too. The system is rigged, not through conspiracy, through design. Inflation is the wealth transfer mechanism. What do you think? Is inflation deliberately designed this way? Can it be stopped? Drop your thoughts. Because right now, every dollar you save loses value. Every asset you don't own appreciates. Every day you remain in cash, you get poorer, while asset owners get richer. This is by design. The Fed knows. The government knows. The rich know. Only the middle class doesn't know. They keep saving cash, following old rules, doing the right thing, and getting systematically robbed. The next time someone says inflation hurts everyone, remember, it doesn't. It hurts savers and workers. It enriches asset owners and debtors. The next time the Fed claims they're fighting inflation, remember, they created it. They benefit from it. They won't actually stop it. The next time you wonder why billionaires keep getting richer during crises, remember, they're first in line for new money. You're last. Inflation makes the rich richer. Not by accident. By design. And until you own assets instead of cash, you're on the wrong side of the greatest wealth transfer in history. Welcome to the inflation trap. You're living in it, and you're paying for it every day.